Well, good evening. Good evening, everyone. Welcome to the reseller tax discussion tonight. I'm excited to get to go live with Carolann and Dan Olson and talk about reseller taxes and what that means for you. And I'm guessing that you may be watching this and thinking you've got a lot of questions, or as tax season and this year comes to a close and the new tax season is upon us, there may be some questions swirling in your head. So I'm excited to get to have this conversation with Carolann and Dan and find out a little more about what taxes look like for resellers. If you're new to myself, my name is Jason. I'm a full-time reseller, and I create content like this to connect with the reseller community and share what I've learned along the way, to share the ins and outs of the reselling business, but also to have conversations like this to help you navigate being a reseller, whether you're full-time, part-time, just starting off, thinking about dipping your toes in. So you're in for a treat tonight. Before we do anything and get into this discussion, I just invite you to click the like this video and subscribe if you're not already following my channel. That will help bring people into this discussion and see this video, as of course, this is a pertinent topic that a lot of people have questions about. And if you can think of anyone that's not here that would like to be here, you can share this live with them as well. One last thing, and then we're going to get into it. Down in the description of this video, so in the live of this YouTube, you'll find the link to the 2026 reseller spreadsheet. And this is a great tool to for two reasons. One, to keep track throughout the year in real time of where your business stands. Track your inventory, your sales, see your profit, but also get a bunch of other metrics too, like platform trends, stores, categories, and brand trends. You can track your consignment sales, and especially things like your business expenses, money that you're spending on your business, to keep track. So obviously you want to know where you are real time throughout the year. And with January coming up really fast in just a few weeks, according to this live from where we are now, you can start off January 1st right with this sheet ready to go. So that's down there, and you can use code TAXTALK to get 10% off your order. TAXTALK. You can find that in the description. Well, this conversation really doesn't need an introduction, but I'll just say that with things that can be intimidating, like taxes, where it's constantly changing year by year, there's some general foundational rules to follow, but each year there are new things with tax codes and tax laws and tax breaks. This is something that intimidates a lot of people. And myself, I'm a math guy, and I still have a lot of questions and don't fully understand all there is, the ins and outs of the tax world. So this conversation is a great one. And when you've got something that is unfair and you have questions about that may be overwhelming, it's great to have someone who not just knows about the topic, but who can walk beside you, stand with you, encourage you, and explain it simply to you, so they can help you, educate you, and teach you along the way. And so that's where Carolann and Dan come in. They've been doing this for close to 30 years. They've got a business where they work specifically with people like you, with resellers in the community. They've been in the community for a while, working side by side with other resellers. And Carolann also works for Intuit, and she's been training Intuit employees. So they're both very familiar with the benefits of filing a certain way or registering as a business and all that come with that. Or even if you're just starting off, dipping your toes in reselling, you've sold a few things, they can explain that too, how you can use this to your advantage. So with that said, we're going to bring in Carolann and Dan Olson, and we're going to get this conversation rolling. So let's do that now. All right, welcome, Carolann and Dan. Thank you for joining me on this live discussion tonight.
Thank you, Jason. We appreciate this opportunity to talk to some folks, since we've kind of been in the background for a little while. So thank you.
Yeah, absolutely. I know we did a live a couple of years ago, and time flies. It's been a while, but it also feels like it wasn't that long ago. But I do want to thank you you're an hour ahead of me. I know it's later, but taking the time as you're getting ready to launch into your busy season, taking time out of your night tonight to just come and chat with us tonight. So thank you for that.
Absolutely. We're very glad to be here.
Yeah, so this is going to be really fun. Let me just start off before I have you all tell us a little bit about yourself. I'll just say to those watching, we've got a handful of people already in here. They're probably going to become, you already have questions about taxes. Maybe something's already on your mind. But if you hear something and you've got a question based on what we're talking about, or it could be something completely unrelated, feel free to put it in the chat. We hope to definitely address and acknowledge those questions that you have. This live is for you. So we'll be covering a few questions here at the beginning just to get this ball rolling. But as you think of questions pertaining to your situation, your business, where you are, please go ahead and put those in the chat and we'll try our best to answer those for you. So with that, go ahead, Carolann.
I was just going to say, and we don't see the chat, so we're just going to count on you to tell us what's out there.
Yeah, and as questions come up, I'll try and display them on the screen, so hopefully you can see them there too, but I'll also read them off. So with that, I'll just kick it over to you all. Why don't you give us a little introduction about yourself? Tell us whatever you think you want to share with those watching.
Wow. Well, like I said, we've both been doing taxes. I was just telling Jason, I think this is my 28th year and probably his 30th year. We've had our own tax business almost since we met. We met doing taxes, so there you go.
I own 3 Liberty Tax franchises back in the early
Ohio.
2000s.
Mm-hmm.
And then we managed 5 Jackson Hewitt Jackson Hewitt offices in Arizona for several years.
Mm-hmm.
And but I've always maintained my own business, even with that. So
So yeah, we're the exception. A lot of married couples don't want to work together, so they don't kill each other. But we better together.
So, it works for some people.
And we're trying to behave, but neither of us do that very well either.
Oh, that's fun. I'm glad that it works for you. Yeah. Well, let's do this. Let's jump into some questions, and I'll just kind of lob some general ones. Just and I'm thinking there are going to be probably a lot of people watching from a wide range of reselling experience. From I just started a few months ago. I've sold a few things to I've been doing this for several years. Feel like more of an experienced reseller, and I'm sure there's still going to be questions on both sides of the spectrum there. But we're coming to an end of 2025 and about to start the new year, so have an opportunity to, as resellers, if we're not on, we don't feel like we're organized now, and it seems overwhelming to prepare for taxes, we can start this next year off right. So organized and tracking things the way we should. So what do you wish resellers understood before tax season starts?
Well, the biggest thing is please track everything all the way through the year, because when it comes to tax time, and if you haven't kept good records, you're hurting yourself.
Well, and plus, we have a website called dayandnighttax.com, and in there's a tax package that you can download.
Well, let me update you right here. We have a brand new one that is supposed to be live, up and running on Monday. So we've kind of revised totally what we've had out there, but we've got a brand new one that's just ready to go off the edge. And so you'll be able to get that packet. And if I have your email, if you're a previous client or someone who's reached out to us already with questions, we're going to just try to automatically email that to all of you once it's live. So that'll really help you. And it'll help you know what you need to, what to track and all of that.
Yeah, it's kind of like a course syllabus that you get at the beginning of the year. It's like, here are all the things to be aware of as you're going throughout your year. So what I heard was, start tracking and just make sure, that person who gets to, and if you're watching and you're at the end of the year now and you're thinking, I haven't been tracking, that's great. You can start off this next year. Just start tracking on January 1st, and it makes the end of the year a lot easier.
And there are ways that we can create some things that you need, maybe ways you haven't thought of, that you can go back and get that information. Just know it's going to take you a little time, but it'll be worth it, because it will really help you with your outcomes.
Danny says, say the website again. You mentioned it, Dan, but can you say that one more time?
Deonite, DEOKNST tax.com.
Yeah, deonitetax.com.
There you
Or
go.
you can, we've got email, you can reach out email, and that way I have it, so we can get it emailed to you, whatever's easiest for you.
Yeah. And I will add to go ahead, Dan.
Email the Thetaxlady at
proton.me.
Yeah, and I have that actually linked in the description of this video too. So if you're looking to reach out to Carolann and Dan, you'll find her email there, and from there they can point you to resources that you may need or their website too. So go ahead and look in the description if you do want to reach out to them for any reason. That's there. What would you say? I mean, you work with Intuit training employees. You also have your own business. What are the advantages to working with a tax pro versus just trying to do your taxes yourself? And I'm sure a lot of people aren't trying to do their taxes themselves, but
well, part of it is, we have a lot of insight on all of the details that, the day-to-day person, day-to-day business owner just doesn't automatically have. And sometimes, you might have a great friend that does taxes, but they don't understand the business side, or they don't understand your business. They can do the research and get it figured out, but it always helps to have somebody who just knows what to look for. If I know there's use for your business and I don't see that expense when you send me your stuff, I'm going to ask you for it. Not every tax preparer will, because they don't automatically know what kind of things you specifically might.
And the hazard with some of the big blocks is they hire people every year that are new,
brand new,
and
minimal training.
They just have minimal training, and they just go through their software questions and boom, 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 and they're done.
Mm-hmm.
A lot of times, what we found, a lot of them will miss home office, for instance.
Yes,
which is a huge reduction for most resellers.
It's just a matter of, again, because we've done it for so long, and because our son-in-law is a full-time reseller. He helps us with our business. He does a great job. He is really good at that same thing. He knows what he uses, so if he doesn't see it when you send in your stuff, he's going to ask you. So it's just having the experience to know how to get you the very best outcome. So ask people who know.
And we have hired Bobby as a tax preparer for us. We've been training him for 2 years now, and he's going to help us with overload if we have it.
Yes, he's great with. Yes. I mean, pretty much whatever we ask him to do, he jumps right in, and he's so computer. He's taught us a few things. So I shouldn't have said that out loud. I don't want him to hear that.
Well, I mean, and we're always learning, right? Even with the amount of experience, we're always learning new things. So
nobody knows everything,
right?
You
don't.
But you know where to go get the answers.
Right.
I thought you did know.
Well, I do,
but that's really good.
Try, but
I mean, for 30 years, you've got a lot of experience, and you know exactly what questions to ask. You know, if someone hasn't given you something, what to ask for. You know what documentation is needed. You know exactly what things will benefit that certain person based on their situation. So you know what questions to ask.
We've dealt with people that have multiple rental units. We've dealt with.
Yeah, we've done that.
I mean, multiple state taxes and all that stuff.
Yeah, I mean, that's what happens when you've done it since you were a baby. But we enjoy it too, and that makes a big difference, because if you like what you do, you're going to spend the time to do it well.
And I'm even licensed to do taxes in New York, which is so are you, yes, which is not always easy to get.
Oh no,
yeah.
New York and California, don't try those on your own, please.
Yeah,
please.
So Danny asks, are you taking on new clients? And yes, Danny, if you're looking for someone to help you with taxes, reach out to them. Let me ask you all this. This may be a dumb question on my part, but is every state available? Like, can you work with anyone in any state, or are there any states that you don't work with?
There is no state,
No.
including Hawaii and Alaska.
Yeah, we can do all of them. Now, we're not going to have every specific for every state in our head, but we know how to find what we need to do it. So
Yeah.
pretty much done every state at this point in our life. So
yeah. Okay, great. Let's kind of move into, and Shelly, I see your question, and we are going to get into inventory, and then I know someone else asked about deductions, and we will talk about that too. So I see your questions there, and we will get into those in just a second. Let's talk about how, depending on where someone is, and let me just kind of throw this out first before I even ask this question. Of course, there's not going to be a right blanket answer for everyone watching, but it's going to be tailor-made based on the person's situation. But generally speaking, when you think between like sole proprietor, LLC, and S corp, what is the best structure for a reseller? Can you answer that, or is it more so dependent on the person?
It can depend on the size of your business. Now, myself, most resellers need to be an S corp or an LLC. Again, depends on what you're selling, the size of your business, that sort of thing. So there's a lot of specifics there.
Can I jump into
Well,
something?
okay,
First,
finish.
I know, as an S corp is great if you're a really huge business, okay, where you can pay yourself wages and you can all this kind of stuff and have better deductions. But there's also comes with it a lot of laws that you gotta have monthly meetings, you gotta have
Oh my goodness!
all kinds of
all
stuff.
this reporting
And all the reporting. And in LLC, most states you have to pay them a fee. Some do, some don't, but most you have to have a fee. Then you got to file an annual report with that state for the LLC
and pay a fee every year.
In a lot of states like Tennessee and I'm not sure about Florida, but you have to pay tax on your inventory. You have to list how much inventory you have and pay property tax on it. And if you're not doing, unless you've got something that you're selling that's going to possibly cause damage to somebody, and clothing certainly isn't going to do that.
Right.
I don't think. But well, I'm just saying.
Let's hope not.
But the reporting that goes along with LLCs and subchapter S's are really, and you have to, and if you don't file them on a timely basis,
they can
there's
have
some huge fines on
and
it.
the fines are really bad.
Yeah.
Unless you're, really going at a big business, which I don't know. I don't see the need, and I think the bad really outweighs whatever good there is in there because of how much it costs and all that report. You guys, your time and energy is really busy enough without having to write minutes for a meeting that you had with, like your spouse or something.
One more thing.
Right.
Okay, LLC, LLCs are only state recognized. They're not federally recognized. Okay, right. So you're still filing a Schedule C on your personal taxes. But when you go to a subchapter S, now all of a sudden you have to file a 1041, which is a business income tax, and then you got to kick out K1s, and then the K1s come back to your personal tax. It's really complicated.
Well, and then you get into whoever's doing those returns for you, they're not cheap. No. So all of that is just more and more expense on you. Yes, you can deduct that expense, but in my mind, do you want to use up your cash flow for that kind of stuff?
Right.
When it's not really necessary.
It sounds like, stay as a sole proprietor. Is that what you're saying? Like stay as a sole proprietor for a while?
Really important is if you are going to do an LLC, if you're going to don't do it as I know a married couple says, well, I don't want to leave my husband's name off or my wife's name off. If you do it as a partnership, bam, there's a whole new can of
Then you're
worms
right
for
back to
you.
the subchapter S.
Yeah. So you want to just put it in one name. It's a sole proprietor. Split the money in the bank account. It doesn't have to be on that paper.
Yeah, because if you put both their names on it, you're right back to almost what I said with the subchapter S. You got to file a 1041 partnership
Yeah, don't
return.
do that.
On top of having to file your personal returns.
And that's why you want to have somebody you trust ask these sorts of questions when you're those things, rather than just going out and doing it because I looked it up online and I figured out how to do it. But you need to know if it's right for you and your business before you do it. So
yeah. That's good. Yeah, my LLC is just under my name, and I had wondered about that, about not having Angela on it, but that's really good to know. So obviously, the answer to this question is kind of assumed, but talk about the importance of keeping. So whether they're a sole proprietor or an LLC, the importance of keeping personal and business finances separate. Is it as important as a sole proprietor as it is as a business registered as an LLC?
absolutely, absolutely. Because when it comes tax time, your business all is in this bundle over here, and your personal is over here, and eventually it gets put together for the bottom line. But as far as you want your business numbers to be clean when they go on that, you want, and then that's the best way to track everything you've spent and taken in for your business. It doesn't have to be a business account, especially at a bank or something. It can be just in your name. And business accounts, they'll whack you with a ton of fees. It's not necessary to have a business name on it. Just keep it in
A separate
account. So
okay.
everything.
Yeah,
So
in our case, with credit card, it's a
Just-
personal credit card, it's not a business credit card, because once you get into business credit cards, there's differences
It's crazy
on
what
fraud.
they do.
how they handle them. But we use a personal credit card, and all we use it for is the business.
Mhm.
And then we have a checking account that's personal, but we only use it for the business.
Yes.
Okay, so
Everything
everything
separate.
tracks through. Because once you go into business credit cards and business accounts, of course, the banks are going to charge you fees for your business.
Mhm.
And the credit cards, if there's fraud on your credit card, there's different rules for business than there are for personal.
Right. So
Okay.
So it's a little cover, like now, if you have something happen on your credit card, you call up the credit card company and says, I didn't do that. They put a freeze on it and they do a check out on it. With a business account, it's a little different. It's a
man.
little different.
Okay.
Again, it's not necessary. It doesn't affect, business wise, it doesn't affect you in any way other than helping you keep track of things better and saving some of those fees that are just ridiculous.
Yeah. I think that's what I did when I started. I just had like a couple $100 in a separate account, and I would just use, it was just like my own personal checking, but it was different than our, our joint account.
Right.
Yeah,
Yes.
that's a great tip. So I know there's probably a lot of interest in deductions and write-offs. What are maybe some common business expenses? Of course, some of these we're all going to be familiar with, but maybe there's some also that may surprise us or that we're not even thinking about. What are some common business expenses that we can write off as resellers?
Okay, I've got a couple of things that are pretty common that get forgotten. Things like when people track their mileage out to, to go sourcing or whatever, track your mileage. If you're going out to garage sales, looking at things to buy, track that mileage. If you're taking packages to the post office, if you're not having it picked up at home, that mileage back and forth to the post office. There's a lot of things that you're in your car doing that you might not realize you could include that mileage. Need to.
That's even go to Home Depot, or Office Depot to get supplies.
Anything like that.
Anything you're doing related to your business.
If it touches your business in any way, you need to track it. Things like home office. So people don't want to deal with just measuring and they don't know how. I mean, if it doesn't make sense to them or no one's ever explained it to them, they just kind of blow it off. But that is one of the biggest deductions that you get as a self-employed person working from home. Or if you have, a storage facility or something as simple as mileage back and forth to the storage facility. Do that. The storage fees, that just so many things. All your supplies.
And there's software out there to track that.
Yeah.
Yes. Mile IQ.
Mileage IQ. Yeah.
Yes, because it asks you, is this business or personal? And not only does it remind you to track it, but it's just you click it, and then at the end of the year, you get a printout of what your mileage is, business versus personal. You say, here, Carolann, here's my mileage.
Yeah.
So
I don't even thrift as much. Oh, go ahead. Sorry.
I'm just saying, and it doesn't all have to be on the same vehicle. It doesn't even have to be a vehicle you own. If you're a business and you're driving it, track that mileage.
Yeah. I think I'm up to 3,000 miles driven, and that's everything from UPS, FedEx, obviously thrifting and all the getting supplies, like you said. So, if you take just my case alone, 3,000 miles and multiply that by whatever the rate is, it's quite a bit of money that you can deduct, obviously, from your taxes that help.
I don't remember.
I think I'm around 60 cents.
They're like 60 something.
Yeah, I mean, that's big.
Well, yeah. It is for 2025 is 70 cents a mile.
Yeah,
so
70
for
cents.
300 miles, you get $70 deduction. That is huge.
Wow. Yeah. Yeah. Alice asks, is there a time limit on the length of business trips?
No. I mean, if you're going somewhere on a personal vacation, but you take a couple jaunts to thrift stores or whatever, we'll just track the mileage back and forth to the store. That one's a little more detailed.
Yeah,
that's too long of an answer to get into.
Some people actually will go travel to thrift stores and stay overnight.
Right. They want to go to another
personal, state. Well, then your hotel bill.
The whole thing is deductible if it's a business.
Yeah, if the sole purpose of that trip is business.
Right.
Yes. So it's either the whole thing if the trip is strictly business, or portions of the trip can be if you're doing some business while you're there. So that's another thing you want to talk to your tax person and make sure you lay that out right.
And another thing is possibly, and this is pretty rare in the research, occasionally you could be doing dinners or lunches or something with somebody related to your business. That would be deductible, but that's pretty rare in a reseller business, I think.
Yeah.
And it's not often you're going to meet with clients or something like that.
Now, if you met with your tax person and you bought us dinner, you can write that off.
Of course, right? Nice steak, nice restaurant. You might as well go all out for that one. So you kind of alluded to the home office, and of course there are other deductions that we've kind of glossed over, like the obvious ones: supplies and office expense. You buy a computer or a printer. Those are kind of some of the more easily understood ones, but I think the home office is one that brings a lot of confusion because people are like, can I take it? Can I not? What, I guess by definition, what is a home office as it relates to tax purposes? Like what does it have to be? Or, and then what types of things can qualify for that? Because I know there's a lot of different things you could talk about that. But the last conversation we had about office, you brought up a bunch of really good points that I wasn't even aware of that you could deduct from your taxes based on your space that you're using. So if you can highlight that a little bit.
Sure. They want you to have a space that is used solely for business. So if you've got a bedroom or you've got just a corner of a room that you use strictly for business, you're going to measure that space and it's going to be compared to the footage. Now, you can have a portion of this room, that out here, out in the garage.
Closet in another room.
A closet in a room. measure each individual space, put them together, and then that's going to get compared to the total square footage of your home. And then you're going to take all of these that you pay being a homeowner. If you pay, they're going to use a portion of that rent. If you have a mortgage, there's a portion of your interest, all of your routine maintenance. If you have a new roof put on, they're going to take a portion of that.
Garbage disposal.
I mean, yes, water, trash, sewer, internet, your phone, all of those things. You're going to take whatever that percentage of your home is that is used strictly for business. You're going to take that percentage of all those other expenses, and
Of course, internet and phone can be different.
it can be, but
Because if you're using the internet pretty much exclusively for,
Yeah.
you can pretty
You
much
can write off more of
the
that.
whole-
same with
yes.
your cell phone.
Yes.
So they're a little bit different than,
Yeah, and we always try to,
yeah.
Do that individually, personally, make sure we're using the right percentage. There was a couple other things. Now I lost it. Oh, if you have somebody come in and clean your house, and they're cleaning that space too, or they get to have a portion of that. Guess who? Someone helped during tax season.
Yeah.
Yeah, I remember you saying like if you paint the outside of your house, you can account for this space. If you get a new roof,
Yes.
I mean,
Yes.
those are all things that were new to
Yes.
me, and I hadn't even thought of as a home. You think of like
You spent money exclusively on that business use.
You get 100%.
If you put in new carpeting or a new wall, that'd be 100% if it's just for that
100% if
business.
it's just for that.
it's just for the home office space.
Yep.
Which I mean,
Well, I
I'm
forget
sorry.
what I'm saying.
No.
I forget what it was. Anyway, just
it's all right.
so
It
many
comes back to you. Let us know. Yeah, huge expenses that could really help dent.
things like that. Yeah.
Sorry, what did you say? You cut out a little bit.
Things like, you have pest control service come in, or, you have to have any sort of maintenance done to the house.
Yep.
A little bit of that can be used as a deduction.
Yeah.
So this is not one you want to overlook. Never,
Right.
never, ever.
Yeah.
So
Yeah, because as we
it's
said,
really
those expenses can add up.
Sorry.
Go
Another
ahead.
bonus to the home office is they will only, allow you to use, like, if you have, $10,000 loss on your business, or you have $500, any sort of a loss on your business. Well, they're not going to use the home office that year, but they will allow you to carry it over every year until you use it up. So even if it doesn't count this year because, you're just getting started, or you don't have a whole lot of profit show on your business by the time the taxes are done, they will roll that over every year until it's used up. So use it.
Yep.
That's a huge thing. That's a really huge thing. And they don't do that for a lot of the other expenses.
Yeah, and save those receipts.
Yes.
Shelley asks, is there a form with these things that can be used?
A form for how you...
I'm assuming she's asking like how to track these things. Like, do you have a form? I will say there is a place on the spreadsheet that you can use for that, but do you all have like something in your packet or something to track those? I'm guessing you do, somewhere in your packet.
Yeah. In the packet, we ask you to list out, what those amounts are for the year. And again, we don't, a lot of times people think we need the backup to be able to use it. I don't need the backup. You need the backup.
Yeah.
All I need is the total for the year, or the total for...
Right.
We're not auditors.
No.
We're just collectors. In other words, if you tell me you drove 10,000 miles, we're going to take that, okay? And we're going to assume you have a log for that. If you get audited and you don't have a log for that, it's kind of on you.
Yeah.
Yeah.
I don't need your... there might be things for it, just be certain forms that you like, your mortgage interest statement. I need that form.
Yeah.
If it comes on a tax form from that provider, yes, I have to have that tax form to be able to
Right.
use it. But as far as expenses and things, you need to track it. You need to give me the total for the year. I don't have to have the backup, but you do.
Yeah. So make sure to save receipts on anything you're expending on your house. File those away, put them in your computer or something.
And that's why we encourage people to use a credit card
When you
for that business. And that's your record keeping for almost everything.
Oh, here's another. If you pay, if you get points on that card, free income.
Mhm.
You don't have to do that. You get
That's
some
very
points
true.
on there that's off part of your bill or however you want to use it. That's not considered business income. That's just a little bit of help in your pocket.
That's an added bonus for sure.
And we're not advertising, but Capital One venture cards are really good for that.
Yeah, they really are.
Good points.
We've had that one for probably 15 years.
Yeah,
and
the nice thing about that is you don't have to do air miles or anything else. You can put it on your Amazon account. You can use them credits on your Amazon account or
buy
anything.
business supplies with it. You can expense that business supplies and you get the bonus.
Yeah. Yep. I love that method of just racking up the points. We use it for vacation. We'll just pay our hotel off at the end of the year or something with the points. So I want to get a question. I want to answer a question, or at least pose it to you from Danny. It came in. So talking about going back to the formation of business. So if you're a sole proprietor, do you file two separate returns, one personal, one business, or does it all come on the personal?
It's included in your personal return is the Schedule C, which is all the detail for your business, and then that gets rolled into your personal return. So it all gets filed as one return. It's just additional as part of your personal return. So yeah, it's all one. You don't file them separately.
Okay, that's really good to know. And Shelly, I'm assuming yes. She says if we go with, meaning if she works with you on taxes, will she get that form for the home office? And yes, I'm assuming you would get that form.
It's supposed to go live on our website. We're thinking on Monday. That's if the guy gets it on there for me then. But if not, I will still I can email it out. So send me an email, and then when we email them, you'll get it.
Yeah, that's great. Last question in kind of the deductions and write-offs section. Unless someone else has a question they want to put in the chat, go ahead and do that now, and then we'll move on. As far as the IRS determining hobby business, how do they determine whether what you're doing is a hobby or a business?
A hobby is something that you're doing intention of making a profit.
Or if you lose profit, or if you, this is it's a tough question to answer because
it's on my document I made today.
I know, but they're small amounts. In other words, you're making less than $2,000 or $3,000 a year, and you're losing money every year. They're gonna consider that a hobby. It's not a business.
Well,
but if you're doing $75,000 a year and losing money every year because of whatever, that's a different story.
Yeah, and one thing about a hobby is you cannot use any deductions against that income. They expect you to report the income,
right?
But you can't deduct any expenses from it. So,
if it's a hobby,
no deductions.
Yeah. Right. Which makes sense. I mean, obviously the deductions are for a business.
Mm-hmm.
Yeah.
Okay. Let's talk about inventory. And I know there was a question up here that I'll highlight here in just a second, but obviously staying organized and tracking you said at the beginning, make sure you start tracking January 1 and track throughout the whole year. And as it relates to inventory, yes. There's obviously a couple ways to do this.
Well, but let me answer a question. Go ahead.
Go ahead and finish.
All right. The
meant for
difference, the
him. He
difference
was-
on inventories are, at the beginning of your business, you have to declare whether you're how do you say it?
A cash accounting or
Cash
accrual.
accounting or accrual accounting. If you're cash accounting, you write off everything you buy, you write off in the year you buy.
As you buy it, yes.
If you're an accrual company, then you've got to keep a complete list of your inventory, beginning and end of the year, what you purchased, what you sold, okay? And either one's fine. And if you're really, really huge, you're probably better off with accrual, but most of them, I encourage most of them just to do a cash accounting.
Yes, just
Pretty
keep track
straightforward.
of what you,
Yeah,
Yes.
it's simple. You
And
buy it,
you
write it off.
expense it when you buy it. And please, if you, when you pay tax on things when you buy it,
Yep.
so include the tax in the cost of that item. If you paid shipping, tax, any expenses that went toward that, include that in the cost of the item so you get the full deduction that you're entitled to.
Yeah, that's a really good
Yes.
point. I don't think, I mean, there's probably a lot of people that don't know that. So if you pay $100 for clothing items at the thrift store, but you have $12 tax, then put the whole 112, whatever that bottom line is.
Every
Absolutely.
time.
Absolutely.
All your supply, anything you buy in business, if you pay tax, include the tax in what you purchased. That's part of your deduction.
Okay. Yeah, I do the cash. It's pretty straightforward. Just I spent it on to I spent it today. I log it today, and I can kind of in my mind push it away and not have to think about it as like following me later on throughout the year. But is there? You mentioned
Yes. Yes. And if you've had it for 2 years before you sell it, you're not still hanging on, oh gosh, and now I need to expense it, just sold it. No, you expense it when you buy it and when you sell it. It doesn't have to be on the same year.
Okay. I'm gonna see if I can find the question that came in early on. Shelly asks, if I started buying my inventory and equipment out of my personal account, how do I pay myself back? I'm brand new. And that's a great question.
Okay. Well, you bought it out of your personal account, which is the only problem there is you just want to make sure that you put it, you track what you spent. Now, if you end up having a business account that you set up now separately, you just take, as you sell whatever, pay back that account that you took it out of when you bought it. So you're still going to expense the item when you buy it, no matter which account you paid for it out of. You're tracking it the same way. So just make sure you track it, and then when pay yourself back is not to track.
And quite honestly, you don't have to have a separate account.
No.
It just makes your record keeping a little
Right. It just makes it
more
easier.
difficult. You have to make damn sure you've got all of the records. Okay. Whereas if you have a private or a business
Separate account.
separate account, not business, a separate account, it's right there. I mean, you've got it.
Yeah.
Right.
You don't have to track yourself back. Just do it. It's fine.
Yeah. Yep.
Okay. Good to know. Last question with inventory, unless another one comes in. How do you treat items? And this may be 3 different answers, 3 different types of ways to track, but items that don't sell or items that get lost, returned, or donated. We all have inventory that we've been hanging on to, and we were sure it was going to be a sure fit, and then it's just sitting there years later. Is there something you can do with that? Do you just hang on to it till it sells? I mean, obviously you could donate it and get the credit there, but what are the options with all of that?
All it is you still have that expense that you tracked when you bought it. You just aren't going to have any income that you track when it's sold. You can donate it, do whatever, and on your spreadsheet for sale price, so that there is no credit for buying it, because you bought it with the intent selling it. If something happened to it, you just don't have to offset that with any income. You get zero.
If you just throw it in the trash can or
Doesn't
the Goodwill,
doesn't matter.
you don't even have to worry about it.
Just put
It's been,
zero.
it's been written off.
Yep.
Now, if you get money for it, obviously you should.
Put whatever you got. If
Yeah.
they gave you a little something
Right.
when you know, something. But yeah, you bought it with the right intent.
That's the beautiful thing about cash accounting versus
Mhm.
accrual accounting.
Mhm. Yes.
Yeah, and that's exactly how I do it. So if you've already taken account for the expense when you bought it, so that's already tracked. If you're doing the cash accrual,
Yep.
that's a good point.
Remind me, Jason, do you have a spot on your spreadsheet for disposed of items? Am I right? Or do I just tell people that?
I've had people ask about that, and that maybe that's something I should add. I don't have that. I've just encouraged people to just create a tab and then copy that transaction or inventory or however many items they have into that new tab. Because if they're putting the cost that they paid, they can just copy and paste it, and then you all will know what to do with it.
Right. I mean, and honestly, you can just put zero in the sales price, which is fine. But if you want to track it separately for your own sake, then yeah, you can put an extra column even or something that says disposed of or not sold, and then zero.
That's very true. Okay. I don't see any other questions for inventory. It's just important that you have some kind of tracking system, track to see your inventory, and that you can, do what you need to do with it as far as donated it or, any of that good stuff. Let's move on to I think one thing when we think about quarterly taxes or paying taxes, a lot of people kind of get into reselling through the back door. It's like they find something at their house, kind of like I did. You find something at your house, you start selling it, and then it kind of gets addicting to where you're like, what else can I sell? And then you don't really think about taxes until months later, and you're like, oh, I've got to pay taxes on all these sales. When do resellers need to pay estimated quarterly taxes? Is that only when they're registered as a business, or is that something they can do ahead of time?
No. Quarterly taxes is for everybody who makes profit, because they're going to expect you to pay tax on that profit, and they expect you to pay the taxes as you earn the profit. So that's why they do it quarterly. Think about this. When you have a job where you get paid on a W-2, they take that tax every paycheck. When you're self-employed, you don't have that option because you're not getting the check where they're filing that for you. So they expect you to pay it quarterly. So there's ways that you can determine what is the right amount to quarter, and that's something your tax person can and should help you with. Even if you're halfway through the year and you go, man, I'm doing way better than I thought. Maybe I should send in some money. Yes, you should. Talk to your tax person and say, how do I figure out how much I need to send? Because you want to do that, because they will zap you with interest and a penalty for not paying it as you earn it, and they get ugly.
If you owe more than $1,000 in tax,
Yes.
they will automatically assess you an 8% penalty per $1,000.
Ugly. It's ugly. It used to be 3%
that
ago. About
we didn't.
about this time.
It surprised us even because we didn't.
Yeah, it had always been 3%, and 2 years ago, right around October, they said we're at 8%. So that's more than double what it used to be. Don't give them any more than you have to, please. And if you send money in and realize, oh, I'm getting a refund this year. Well, if you send in more than you owed, they'll just into your refund. So
okay,
you'll get it back when you file your tax return.
Yeah.
But it's better to overpay than underpay, because they don't take kindly to that.
Yeah, they've gotten nasty about this.
They get nasty.
Yeah.
So
don't want to mess with the IRS.
No.
How would you, I mean, obviously you kind of alluded to talk to your tax professional about how much you need to set back, but is there like a percent, like a general rule, like set back 20% every month from your sales, or what would you say to that?
we usually,
I'd say 10%.
of their sales every year for
Well,
taxes?
Well, again,
I mean, in the past, we've always said 20.
you've got your spreadsheet, right?
You can
You
tell
you kind of know every month how much money you make.
how you're doing, right? So, you want to put, I don't know, it depends on what bracket you're in, the whole thing like that. If you want to be really safe,
Right, 20%.
20% is what we've always said.
Yeah.
Because again, you'd rather get a little back than have them hit you with an
Yeah.
interest or a penalty because you didn't pay enough.
Yeah, because most people are in a 10% bracket, but there's a 15% self-employment tax.
Self-employment tax,
Okay,
yes.
that covers your Social Security, Medicare that you would get if you were a W-2 employee. You have to pay that. Well, you have to pay the whole thing, the whole 15% versus your company pays half of it.
Part
You
of
pay
it.
half.
Yeah, you pay all of it when you're self-employed. So, another thing that's really important, like when I do a tax return, say, Jason, I was doing your return and I see what your tax liability was for that year. Now, I'm not talking about your bottom line, whether you paid enough and get back or owe more, whatever. I'm talking about up a little higher on the return. It says total tax liability, and that's on your income and your tax bracket. Take that amount, divide it by 4, and add just a little bit to it because you're hoping your business grows, right?
Mhm.
Take that, divide it by 4, maybe round it up, and pay that amount. Because if you cover your liability from the previous year,
Yes.
they're a lot kinder interest and penalties. In fact, they will use waive it. So if you cover your liability for the previous year, you're in great shape. And that's how we do, like when we do the quarterly payment slips for everybody if they ask for them. That's how we do it.
There's a fill out.
Yeah, we can give you the form
And it tells us what your last year's liability was versus this year's,
Mhm.
and blah blah blah. There's ways around it. But
Yes, and that's a great way they do it, because they say, well, you can't, if you're self-employed, you can't always predict what you're going to make. You know what you had last year, and you should at least cover that for the next year. So that's the safe way to make sure you don't get hit with that.
Okay, gotcha. That's good to know. So, I mean, if you're just starting off, a conservative would be 20% of your sales, set back as your tax liability.
Yes, and then hopefully you left when you're done. You shouldn't have to use it all. But
20%.
That seems like so much. I mean, it's like, you take your sales and you knock out your fees and shipping and all these other things. It's just, it goes away so fast.
Well, again, if they're tracking and they've got this, like your spreadsheet, which is wonderful, it gives you, you're doing your income and expenses all together, and it gives you everything right there.
And we can do 20% of your net.
Yes.
Yeah.
Not your gross.
Yeah.
Yes.
Okay.
If you're tracking everything, you're not, excuse me, you're not risking a lot by taking 20% of your net and putting that back.
Yeah, that's good. That's a good point to follow up with. Yeah, and for those that don't know, go ahead, Carolann.
We'll say everybody's personal situation is just that. No two returns are going to come out the same way. We can give you these general things that will help you stay prepared and stay ahead. But, if you have children, you have this, you have that, all these things, yours is a little bit different than everybody else's. So we can give you the general stuff, but unless I have your information in front of me, I can't be more specific.
Right. Yeah, that's a good point. Whatever I was going to say has slipped my mind. I'm just going to say, you alluded to the profit and loss statement on the spreadsheet. And for those that aren't familiar, there is one tab that brings in, based on what you've been entering into the sheet, it brings in all of your revenue, it brings in all of your expenses. So not just like shipping and fees and platform fees, but it also brings in your supplies and business expenses and things like that. Shows you your net. So you can use that tool to, like she said, take a percentage of that and set it aside every month. Which is kind of a great segue into this next section of like bookkeeping and record keeping. You alluded to earlier, keeping track of everything, and you need to have the documentation to back up what numbers they're giving to you or to your tax professional. What are types of things records that resellers need to keep in order to protect themselves in case of an audit? So obviously, your credit card statements that you said before, but what other things can you think of?
Well, and along with that, a lot of people think, well, I can keep every receipt. But if you're using the card that you've set aside for your business, credit card that you've set aside for your business, you'll have bank statements. And that's, great or better than keeping every individual receipt.
Another thing is garage sales.
Track it.
Just
You
track
have to
it.
write it.
You bought this amount of stuff and where it was at and what the date was.
Yeah.
Put it on a piece of, I don't know.
On the spreadsheet,
Yeah.
yes.
Okay.
You don't have to put the exact address or a person's name. You garage sale on this street day. Here's what I bought. So even if they're not handing you a physical receipt, if you're putting it in writing as you go, that's acceptable. Another thing, they're like calendars. I mean, IRS has always been gaga over calendars. I don't know why, but in their mind, that means you kept it as you went along rather than you pulled it out of somewhere else at tax time. So they've always liked that. Bank statements are huge. Oh, one thing, your tax person is these platforms that you sell on. Yes, I know that you get like a monthly statement of the breakdown for that month, but at the end of the year, we don't want the one from every month. We want the one from the end of the year, of all 12 months. That needs to come to your tax preparer along with, if they sent you a 1099-K, some do, some don't, and there's specifics there that I don't have to get into, but take that form needs to go to your tax person, because there's going to be some numbers on there that you might not have thought of that I'm going to go, oh, look, there's another deduction, and write it down.
All right. Another point on that is tips. If you get tips like from Whatnot, they're not taxable this year.
Right.
Really?
So
you need to have that stuff.
you want that end of year statement from Whatnot with the amount of tips you got that year, because based on your income, you can get up to $25,000 deducted.
That's interesting.
That's
I didn't know that.
Maximum. That's the maximum, and it does start to phase out at $150,000 per person. So if you're on a joint return, you get $300,000. But get those end of year statements, because if there's something like that on there, yes, that is a huge difference on your tax return this year.
Yeah. So I would say that's probably, when it comes to the end of the year, the spreadsheet that I have has kept me up to date until the end of the year. But that's probably where I spend a lot of time, is now going and saving all of those documents, the credit card receipts and the bank statements, just so I have them in my records. But what's kind of the cutoff for, is it 7 years or 10 years, or what's the cutoff for when can we start getting rid of old records?
The rule is they won't go back more than 3 years. But they request that you keep them for 7 years. Okay? Because if they can prove fraud, fraud, they can go back forever.
Yeah.
But
God help you.
My personal opinion, here's what Jeff Hewitt, H&R Block, and everybody else, after 3 years, they dump all your records. Okay? They eliminate them all. So if you have a problem 4 years after, and you go back to one of them, they ain't gonna have it.
They won't have it. So you have.
We don't. We keep them.
Yeah, we
keep them. I'm back to.
Oh gosh.
I've got back to 10, 12 years.
But here, I'm going to do this and say he hoards records. Okay.
Should we pan around the room and look at file cabinets?
Bro,
file cabinets won't hold it all, buddy.
When we went,
that's true.
Roaming 2 years ago, I had every checkbook, everything I had done from 1972 to 2014.
Wow.
It cost me $300.
Have it shredded.
To
shred it.
Wow.
So I'm a little I would say 3 years. 3 years for sure.
Yeah.
There
Okay.
you go. I told you.
3 years
Okay.
unless you've been doing,
Yes.
no,
Yes.
doing fraudulent activity. So here's kind of a random question from Danny that's not related necessarily to bookkeeping and records, but he says, I'm a new reseller, probably not going to make a profit. How do you file taxes on a business that shows a loss instead of profit?
Because it's on a Schedule C into your personal tax return, that loss can on the other income that you have. It's still filed. It's the Schedule C just shows a loss instead of a profit. And when it gets rolled into, you've got you or your spouse has a full-time job or a part-time job, you have income there that you're looking for, it will offset that income. Or if you have investments or something that are
reduce the tax
getting money.
liability.
I'm sorry.
Sorry, I cut you off, but you're basically
up.
saying it will reduce your tax liability from your W-2 or what other income you have.
Yep. Yep.
Okay.
Yes.
So I'm sure there's probably a lot of people watching, again, who are newer resellers, and maybe they're just doing this for fun. Maybe they have a job, you know, like I started off, I had a job and I was just doing it for fun for a little while. But maybe for the people who are thinking this could be a full-time thing, is there anything to think through tax-wise for making the jump from I'm a part-time side hustle on the job to now I want to go full-time? Is there anything to think through pertaining specifically with taxes, with making the jump to a full-time thing?
One thing, it's on my mind because of something I was working on today, that, you know, if you have a profit from your business, there's that 15% self-employment tax that contributes to Social Security and Medicare. It's not always the best idea to make sure you have enough write-offs to cancel out any profit, because there goes your retirement. All right, be contributing to a retirement account, and that's great. But again, at some point, you have to determine what's the best way to track and account for your business to make sure you're covered later. But then,
okay, I'll give an example. We have a client that have lost money every year. And they're musicians, okay? Well, they come to 65 and they're retired. Yeah, they're getting like $300 a month from Social Security.
That's all they have to live on, and it's because they.
Yeah.
Okay.
So I mean, it's a catch situation. You know,
Yeah.
It all depends on what personal needs are.
Right, and you just want to make sure that you can still live on what you're making from reselling and still pay your taxes and still have something to put back for retirement, because it all sounds great until you don't. So, and you have to, and again, think about that. If you're not putting in the work, you're not going to have the. So you have to be willing to put in the extra work. Sure, your income is high enough to cover all those things.
I'd like to add one more thing.
Okay.
So if you're a full-time reseller and you're making good money, there's something called SEP.
Yeah.
Self-employment. It replaces the 401ks. You can actually put into a SEP account up to 20% of your earnings, which is almost the same as a 401k. Okay,
You can put
so it
more
reduces your income for that year. So you're not paying tax on it. It goes into the SEP account, the 401
retirement account.
Yeah, it's a retirement account that you can't draw out of it until you're 59 and a half.
Right.
But that's
It,
for your future.
Yes,
Yeah.
and it allows you can up to 25% of your income just on that business. It's only for a self-employed person, not an account anybody.
Right.
And you put in now, $7,000 a year. They want to limit, or if you're putting that into a 401k. But a SEP account, you can put up to 25%. So you can put a lot more to build up for when you retire. I mean, there's so many things. You have to have a good financial person. We're not financial planners. We can tell you what's worked for us and a little bit of what but that's not what we do. And we don't ever want to be that. But have a good financial person that can look at your numbers and look at your returns and help you plan so you don't get any surprises. That's the best way I can help you.
That's a huge thing, whether you're self-employed or working for someone, just to have a plan, which unfortunately, I mean, that's a scary situation to be mid-60s and realize I'm not going to get much from Social Security.
It happens so much.
It happens a lot.
Unbelievable.
Like, I'm great because I didn't owe anything on my taxes, but then they didn't put, it didn't add anything to their account, Social Security and Medicare, and that could really hurt.
Yeah.
It does.
Yeah. And that was one of the questions I posted on Facebook, just kind of asking for questions for this. And someone said, do resellers get Social Security? Which is a great question. And so I'm glad you covered that. With an S Corp, though, you get a W-2, which is then
No.
Is that?
Oh, yeah. You're right.
Yes.
You're right.
With an S Corp, you get a W-2. So that is
right.
Obviously that's going to contribute to your Social Security.
But you got a quarterly on an S Corp, if you're doing W-2.
Yes, but he's talking about Social Security.
Well, but I'm saying, but they've got to file quarterly tax returns or 941s or 940.
Yeah, 940.
They have to file quarterly and pay those. You got to pay half of the Social Security in at that point, okay, and half of it goes.
Don't do that.
Okay, and at the end of the.
Don't go there.
Well, I'm just saying.
I'm just like, I am so against
it.
It's so complicated, and I just think, why do that? It's complicated.
Yeah.
Not for me. We.
Yeah.
Long story, but
keep it simple.
Yeah, we just allow it to show some profit on your business, so you are paying that self-employment tax. It's for when you retire with Social Security and Medicare.
Yeah, it's a catch-22. You either pay it now or you pay it later, but you either have to pay tax on your income and put money into Social Security, or you don't pay anything because you wrote everything off, and then you don't have anything when you retire if you're not saving.
It's so.
But an S Corp doesn't answer that question because you're still paying it in, and you're paying the employer's half coming out of your pockets.
Yeah, you're paying both sides.
At the end of the year, you have a W-2, and you have to take it out of the W-2 as well. Okay.
Yeah, it's just I can't see the bad. To me, it hurts. It doesn't help.
Yeah.
Where it helps, people are making. Let's just say you're making $100,000, $200,000 a year, whatever. Where it helps there is the profit then. But here again, here's your catch-22.
Yeah, we're going a little deep, but that's okay.
It may be too deep, but the profit then goes into investments rather than.
Yes.
But it doesn't go into your Social Security.
Okay, gotcha. Last thing that I'll throw out, something I did, and I'm sure you're going to recommend it. I don't know if there are any drawbacks to it that I can see, but if you're a business, getting a sales tax exempt certificate for things that you're going to buy, would you recommend that, or are there drawbacks to that?
Again, there's a monthly reporting to that.
Right.
Is it not? Where the only benefit to me of having it is for someone who has a larger business and they don't want to pay that sales time they purchase something because they want that for their cash flow. But again, there's drawback where if you pay the sales tax, you just deduct it off your tax return.
That's true.
More than that.
Well,
no, it's more than that because you have to have a sales tax permit.
That's what
and you have to charge sales tax on everything you sell, and you have to report that.
Do that for them. So
no, not what he's talking about.
Well, I'm thinking more so like if I go to a store and I buy a thing of clothing, and then I show them my certificate, and then I say I don't have to pay sales tax on this purchase of goods that I'm going to sell online. It
Right.
saves me that money at the cost of at the point of purchase.
You're gonna have to file a monthly sales return to your
Right.
state.
And your platforms are collecting and filing that for you. So why would you do that to yourself? Unless you're not selling through a platform that does that. But
Yeah.
you know, the majority of resellers are using the platforms that automatically collect the sales tax, submit it for them. The sales tax exemption certificate doesn't really do anything.
Because
for them.
you're deducting that sales tax anyhow from your income
You're right.
without the exemption.
Yes.
Okay, you pay the sales tax, but you're deducting it off your expenses.
Yeah.
Same difference.
So you either don't have to pay it when you you get it. So
That's good to know.
I always say for a seller, I wouldn't add that additional level because the platforms are automatically doing that paperwork for you every month, submitting that sales tax they collect.
Okay, good to know. Thanks for clarifying that. Last random question here, coming from Bobby. Should I claim items should I claim items I sell at buy-sell trade stores like Plato's Closet? I do, but I don't know for sure.
He knows.
No, asking legitimately. If he's selling things to a Plato's Closet,
Yeah, selling clothes.
Because so you're going to expense it when you buy that item, and then you eventually take it to Plato's where income for it. So yes, when you sell it there, you're going to account that for the income because you've already offset the expense of the item when you bought it. So yeah, you're going to do that.
Does he collect sales tax on that then?
It does.
Okay.
It's
Okay.
Yeah.
Yeah. All right. Well, I mean, this has been really great. I feel like we could just keep going, and I even had more questions I was going to ask, but it's already time to wrap up. This has been fantastic. I appreciate you all just sharing with us your knowledge and insight in the tax world.
I hope we didn't just go around and around and around like you've been in a black hole because we've done a lot of stuff there, a lot of angles. I'm sorry.
Well, I'm sure there's a lot that people have to grab onto, and of course, again, if anyone is looking to work with you all, their information is in the description, so you can reach out to them. And if you have questions, of course, anyone watching this later, not during the live, if you ask any questions on my channel, I'm not going to be able to answer them because I'm not a tax pro. So I'm just going to refer you to Carolann and Dan. So reach out to them. They can definitely help you out. And if you're looking for someone to help you with your taxes for this next year, for 2025, let them know. Reach out in the description of this video.
Refer them to our website. There's a lot on there where they can ask a question, and it'll automatically send us
an email right through the website if
you
have a question. They want to go there.
So go to their website, and it'll all be right there for you.
Yep.
Yeah, I'm trying to think. I think that's about it. I'll just, before we say goodbye, I'll just, to anyone that jumped in, if you're looking for a reseller spreadsheet, the 2026 reseller spreadsheet's linked in this video. And again, you don't want to get to the end of the year and find yourself overwhelmed and having to go back and track sales and stuff. Start January 1st. So you've got a great tool to do that.
We love
your spreadsheet. We tell everybody
to
use it.
I actually just got that comment from someone completely unrelated that said my tax person loves it. And honestly, I mean, you know this, Carolann, when I was creating it 2 or 3 years ago, or refining it, I guess, for that year, I consulted you and said, what things would be really good for you all to make your job easier? And so some of the things that are on that sheet were a direct conversation with you about, like the home office expense and the mileage tracking and all that stuff too. So
yes, we absolutely love it. And when anybody says, I've got Jason Hayes' spreadsheet, a sigh of relief, we know it's going to have the information we need.
Yeah, I appreciate that. And with that, just so you know, that comes with a full year of customer service. So if you delete a formula or something's not working in your spreadsheet, you can always reach out to me and I'll respond in a business day. So just keep that in mind. You're not just getting the spreadsheet, you're also getting customer service, technical assistance for the year. Again, let's mention that website again. Someone's asking in the chat your website. DEO, Deo Night.
EO, his initials was my maiden name, Night Tax. DeoNightTax.com is the website.
That leads you to everything.
Then leave us a message there. The new packet will be coming. We're going to have a new form that's for new clients. We'll get you set up in our portal so you can, send your documents to us. Everything we have is very secure. We spend a lot of money to make sure our email and all of these things are very secure for the type of information we process, so you don't have to worry about that.
And new this year is we're using a portal.
A portal.
That upload everything to your portal. Comes to us, and you have it, and then we deal on it, and it comes back to you through that portal.
Yes.
There's really no email.
You don't have to send us things through the email, no documents through the email. Now it's all going to go portal, which is
totally secured.
Part of the, the package that we use to do the returns in. So.
And your return will come back to you through that portal.
Through that same portal.
And you'll have that record.
Oh, that's great.
Yeah. Yes. It's a lot of good things. And here's a good plug for Bobby, because he has said, oh, what about this? Well, will it do this? Will it do that? And I said, I don't know. Why don't you go check? So he's been out there and figured all these things out, and he's really helped us a lot with that. What's it say?
Do you use TaxDome? Are you familiar with TaxDome?
I don't. We use Tax Pro Link is the tax software, and we've been using that for
Okay.
Yeah.
I just dropped your website in the comments. So for anyone looking, they can find it right there, click it, and reach out to you, send you the email, whatever they need to do. So it's all good to go. And yeah, even if you have just a question or something, you need a little clarification, reach out to them. They'll help you out and point you in the right direction. So, well, I know it's late for you all. You're on the East Coast, I'm Central. So I just want to, again, thank you for your time. I know it's very valuable at this time of the year. So I appreciate you all sitting down with us and sharing what you know and who you are.
Well, we appreciate the opportunity, and we really appreciate it. I know that you put our name out there on the spreadsheets, and we throw yours out there all the time. I wouldn't do that if I wasn't happy with what you do. And we appreciate you promoting us as well. Thank you very much.
Yeah.
Very much.
All right. And I'll just say thanks again for everyone joining and watching us and hanging with us and asking great questions. And so I guess with that, we'll wrap up and say goodbye. So y'all have a good night. Thanks so much.
You all. Really appreciate it. Thank you so much.
We'll see you.